Good day traders, Stacey Burke from Stacey Burke Trading. Today continuing our discussion on the 12 candle rule that I use for myself, and I'm just going to demonstrate how I use the iSessions indicator, which I'll include the link for below, and how I set that up. I'm just going to show my time frames. I just double click on the iSessions indicator. My Asia box starts at 1 and I go to 8:45. At which point I look for the Europe market to open up, Frankfurt, and then London 1 hour after that at 3 a.m. New York. I leave my Europe box, my 12 candle box, blank in terms of colors, and then I have a neutral color that I use to identify the end of my 3-hour window that I use on my 12 candles, 15-minute candles that is. And that's just my warning box telling me that I'm at the end of my time. And then, of course, the light green session for New York starting at 14 o'clock candle, which is the 8 o'clock New York, 8 a.m. New York time. So 8 a.m. to 11 a.m. New York Eastern Standard Time and 2 a.m. to 5 a.m. New York Eastern Standard Time are my Europe and New York boxes. Now, today, just want to emphasize a couple of things. The reason why I use this, now I'm just going to compress this a little bit. We'll go back and just scroll through. What this allows me to do is to come to the market each day and, not knowing what's to the right of the screen, I will look at a previous day's session. So we talked about, who may have been in profit from the night before. We have, as we come in, if we came somewhere in this 2/3 into the box, I would be looking at my Asia high, which I would project forward, and I would look to the left to see if there was any significant levels of supply or demand there, which we can see potentially there may be a level where the market has sold off in the late US session. Now, because we have a wick down here, that would be my low of the day. And of course, I can go back to the left and look to see if there are any other significant levels. And in this particular case, this being a Monday, Tuesday, Wednesday, we're on a Friday box. We could be thinking Friday reversal on this trade setup. But all I'm looking at with this is my box heading into the London Open. So we have a high and a low of the range. The next component that I usually will look to try and do is identify 3 levels of push in one direction or the other. So heading into the London Open, we have 1 thrust, 2 thrusts, and potentially a 3rd thrust going down. So as the market opens, I talk about using 12 candles to look for trade setups. And I'll blow this up a little bit to make that a bit more easier to see. And what that allows me to do is I know that we have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 candles where I should see a move occur. Now we talked about looking for railroad tracks. I'll just bring a little drawing tool up here. If I can figure out how to use this, we'll use freehand. So railroad tracks, again, we're looking for something to sell high. Initially, I always expect 1, 2, 3 pushes up into a high. If it was down to the downside, we might expect to see 3 pushes to the downside and then a stop hunt and a trade in the long direction. So in this particular case, we saw the market push up into a high where we see previous supply, and then we get a railroad track confirmation. For me, that's a trade setup. Now, what I'm not doing here is saying where I would have went in the market. What I'm doing is trying to help you identify how I approach the market each day to keep it as simple as possible, to reduce my screen time, and to focus on the highest possibility time frames for the highest possibility trade setups in terms of risk reward. We talked about the range of the market. So in this particular case, we're looking at approximately 25, 30, 40 pips high to low. And again, in some cases, if the market was to do a measured move of that, oops, we'll just reverse that. And we'll click in our other tool. We may be looking to target 2 times that range in some cases, or more, depending on, and this being a Friday, we may be looking for a reversal setup, whatever that may be, whatever your trade plan calls for. But my point is that I allow myself that 3-hour window to be intensely focused, looking for specific trade setups, and then leaving the market. I know each and every day there's at least 25 to 50 pips, somewhere in that range, that's tradable, with keeping these 2 areas as my main areas for looking for trades. And the reason why that is that I can have a 12 or 15 pip stop and potentially 25 again to 50 pips of tradable range to target. So if we scroll to the next day and we do the same thing, I'll just scrunch this up again. Again, we're not looking at where I would have entered the market. I'm looking at how I approach the market to identify the highest probability areas. In this particular case, we would draw our line where sellers entered the market the previous session and have not been stopped out. Their profit, they may have gone to break even, but they still may have stop losses up above somewhere. And we also have our Asia box again. We have a high and a low. And in this particular case, again, we see 3 pushes down into the low. We see the market give that small last little grasp at the bull candle. Some traders would have went long at the bottom of the box, traded the stop hunt. Then we see a railroad track reversal for traders who are waiting for that confirmation, and they may have taken that trade short. Again, I've said this before, the best trading opportunities will occur above or below the box, and that occurs as the day evolves. Now you redraw your box for the New York session. As New York begins trading, you redraw your box. And again, the same principles apply. Your range is now increased, but you have 1 push, 2 pushes, 3 pushes into a low with 1, 2, 3 pushes in that 3rd push, which is a prime. I start to look for those because that's where you're really, you get little tricks from the market makers, but that little inside bar on the 3rd push of the 3rd leg down could offer you a huge, again, asymmetrical risk reward. 1 bar stop, targeting the high of the day. Going to the next day, same thing again. We look at who's in profit from the night before, who hasn't been stopped out. We redraw our box. And again, the whole point is using these 12 candles to identify our highest probability trade opportunities. We see 1, 2, 3 pushes to a high, but also what we also see here, which is super powerful. If you don't already know about this, we'll just color this in. 3 pins. 3 pins at the top of a market. Super powerful in terms of a reversal. If you get a 3rd pin pushing in at the top, I'd be looking to sell somewhere up above that 1st wick, or at the limit order of that 1st wick, placing my stop 15 pips roughly above there. Other traders may be looking for the engulfment of that final grass bull candle to trade that down. And again, we talk about level 1 type trades, not counter trending a level 1. As you can see, this choppy up and down, stop hunting both sides of the market is potentially a level 3. And that level 1 starting the cycle in the downward movement is our straightaway trade, and we do not want to counter trend that. Some traders will get into the market, not use a stop, or they'll hold on to a losing position, and we're not sure how far this market could take us. But again, just focusing on those 12 candles. If we again blow this up a bit, just have a closer look. Take a look, and we've just got to focus on these 12 candles, looking for the opportunities once it comes outside of the Asia box. Again, the next day, we look at who's in profit. We draw our line across. So again, these are traders who have gone in the market at some point and not been stopped out, or they've moved their stop to break even. The market is constantly going after where the money is. So we redraw our high and low on the Asia box. Okay, we see the breakout. So again, we have 1 push, 2 pushes, 3 pushes into a low, and a pin on the bottom. There's an opportunity. And again, we're going back to the high of the day as our target. So again, just start focusing on the 12 candle rule, reducing my screen time, looking for the highest probability time frames for entering into the market. And again, if the stop hunt's high, I want to be selling. If the stop hunt's low, I want to be buying. Now, I'm not saying to randomly buy and sell at the high or low. You need to have some kind of confirmation or rule or way that you apply your trading to the market. If you're going to be randomly doing that, you probably still have better chances of having good trades as long as you're outside of the box. But as you can see here, we see the stop hunt low, 1 push, 2 push, 3 pushes into a low, and we get our W pattern at the bottom. Traders can enter that long, and then we see the two-headed stop hunt up top as well, and then reversal in the New York session. So there's opportunities all over the place, traders, but best thing is number one, time frame, and number two, letting that Asia box evolve and giving us some information from the previous sessions about where our support or selling and buying levels are, and potentially who's still in the market who hasn't been stopped out. And as you can see from this previous US session, there's a couple of bars that would still be holding their own, but for the most part they all have wicks and they've either been stopped out at break even, and so the market will go back to the other side to see who hasn't been stopped out yet. And then again the cycle evolves again, breaks out, pulls back, fills more orders, and continues. So hopefully this helps traders. Use that indicator, the iSessions indicator. I just set those times as I showed you at the beginning of the video. I focus on those 12 candles as I head into the New York session. A lot of what my focus will be on is based on what happens in London. And sometimes I don't trade New York, I'm just tired, or for whatever reason, if I've gotten my pips in London, then I'll just call it a day and start back fresh the next day. So keep it simple, traders. Again, the 12 candle rule, I try to intensely focus on those 12 candles, keep myself off the screen, hopefully keep myself out of taking poor quality trades. I'm looking for 3 or 4 types of specific candle formation patterns to help me sell high or buy low, and then I target a measured move opportunity. But as soon as you clear a level, a previous existing high or low, that's when I go to break even. And if the market shows me any sign of fatigue or failure at one of those highs or lows, I'll be looking to either exit the market with whatever it's already given up, and ideally that range will probably be usually a minimum of 20 to 25 pips. And again, you can assess that from your box size, but in most cases you'll probably get anywhere between 25 and 50 pips as a sort of normal movement in the London session. So hopefully this helps, traders. Stay disciplined, stay focused, use that box, look for trades to occur above or below that box. I try to stay out of the inside of that box completely. As you can see, these are where poor quality trades can be entered, and they just tend to not go anywhere or get stop hunted, or you don't really get an opportunity to go to break even or realize any significant profits based on the amount that you're actually risking to get into the trade. So keep it simple, traders, and may the markets go with you. Hi traders, it's Stacey Burke from Stacey Burke Trading. If you haven't done so, please head over to my website at staceyburketrading.com. I create updates on almost a daily basis, and I would love for you to receive them. Just click on the blog. If you want to enter your name and your email address, I'll send you my free audio program, the 7-Step Daily Routine for High Performance Traders. This is essential knowledge for all traders in all markets, and this is for helping traders to master the market with discipline, confidence, and a winning mindset. I appreciate all your feedback and comments. As always, traders, stay disciplined, and may the markets go with you.